I think there are a few ways in which our strategy is differentiated. The two main ones that I'll focus on are exactly how we framed the opportunity set and then our value orientation. When we've designed the opportunity set, we're really looking for companies that are going to help the world address climate change, and we're not coming at it from a moral or ethical perspective or wanting to sound good. And what that means practically is that we'll invest in companies that are producing copper or nickel or cobalt or lithium, the major materials that are going to be key to moving to clean energy solutions. And a lot of people who are focused on the environment or focused on ESG investing don't like the extractive industries because they perceive them to be dirty industries. The fact of the matter, though, is that you cannot get off of fossil fuels without using materials in some way, shape, or form. You've just moved the burden from fossil fuels, which are incredibly damaging to the environment, and particularly from a climate change perspective, and onto other materials that I've just mentioned. So we're not trying to sound good. We're trying to find companies that are really important to the transition to clean energy and that will be able to make a lot of money for their investors. The value orientation is also quite differentiating. As we've talked about our strategy over the last year and a half, 2 years, we've found that virtually nobody is using a value bias or a value orientation investing in sustainability, impact strategies, ESG strategies, whatever you want to call them. And that's a real differentiator for us, because we're not just going to buy companies because they sound good or because they're growing. We're going to make sure that we think that they're strong investments, and that comes first and foremost for us. Well, we're really looking for opportunities in the global public equity market. So we're agnostic to where a company is domiciled or where they're located. We're focused on a global market. All these businesses are focused on global markets for the most part, and we're going to go where opportunities lead us. So we have a substantial percentage of the portfolio in the U.S., but almost the same percentage in the emerging markets, and then the bulk of the portfolio spread throughout the rest of the developed world. So it's a global public equity strategy. When we're looking at opportunities in the public equity space, obviously we're looking for companies that are pure plays on efforts to address climate change. So we don't want to be investing in companies where a small part of their business is addressing climate change, but the bulk of their business is unrelated. We're looking for companies where their prospects are really driven by their efforts to address climate change. We're also looking at the industry dynamics in which those companies operate. So if you're operating in an unfriendly environment where there's little in the way of barriers to entry, there's very little product differentiation, lots of players, then that's less attractive to us than where there are identifiable moats and competitive advantages and product differentiation and all of those things that make you much more comfortable when you're deploying capital. I think that the world is increasingly realizing that climate change is impacting our day-to-day environment. You have droughts out in South Africa. You have hurricanes and typhoons hitting all sorts of different parts of the world at a level and frequency and intensity that we've never seen before. You have wildfires in California and lots of other extreme weather events. They're increasing in frequency and severity, and the world is waking up to the fact that we need to address climate change. We need to address it aggressively. The Paris Agreement is a landmark, unprecedented agreement between every nation in the world, effectively, even though the U.S. has since wavered, but every country in the world agreeing to put billions of dollars and lots of money into addressing climate change. Nothing like that has ever happened before, and I strongly suspect that the public policy support for clean energy efforts 5 years from now will be much stronger than the public policy support today.